Welcome to Illuminati Silver. We tell you the truth about silver. Today is Saturday the 16th of May 2020 and we're publishing our gold and silver weekly update for the week ending the 15th of May. Gold rose $40 last week from $1,703 to $1,743, having hit a high of $1,752 and a low of $1,693. A rise of 2.4%. In sterling terms, gold finished the week at £1,440. That's up £68. And in euros, it closed at €1,611. That's up €40. Silver rose $1.14 from $15.52 to $16.66, having hit a high of $16.76 and a low of $15.30, a rise of 7.4%. In sterling terms, it closed at £13.76, that's up £1.25, and in euros it closed at €15.41, that's up €1.13. The gold to silver ratio fell from 109.7 to 1 to 104.6 to 1. The Dow Jones closed on Friday at 23,685, up 60 points on the day, but down 646 points on the week. The S&P 500 closed at 2,863, up 11 points on the day, but down 66 points on the week. And the Nasdaq closed at 9,014, up 70 points on the day, but down 107 points on the week. Brent crude closed at $32.50 a barrel, up $1.53. And WTI crude closed at $29.43 a barrel, and that's up $4.69 on the week. The dollar index stands at 100.40. That's up 0.67 points on the week and represents a similar rise to the previous week. Now, before we talk about gold, we did comment last week more on silver, and this is how we concluded that part of our presentation. Quote, next week we should see some interesting movements in silver, and we expect gold prices to be benign. Silver will either follow through its end-of-week gains and make serious attempts to reach that highly resistive $16 level, or will fall back to its comfort zone of $15. Either way, we are proposing raising our trading band of $1.50 from $14.50 to $16 to $15 to $16.50 for this coming week. Unquote. Well, silver did perform extraordinarily well, and so did gold, but to a significantly lower extent, whereby silver rose in excess of 7% and gold 2%. So undoubtedly, silver was the star of last week. Now you may remember that when silver actually dipped just below $12 less than 2 months ago, we stated that it was a very good time to buy, even if you had to purchase it from a company like Bullion, or similarly, to avoid the unnecessary premiums dealers were then charging. You may recall as high as $10 premiums for some silver coins. Well, if you did that with Bullion, quoting a sell price now of $16.64, and at the time you could have purchased silver, even allowing for their commissions and costs and premiums of $12.40, you would have made more than $4 an ounce. And hey-ho, to those who believe the end of the world is nigh, Bullion Vault are still in business, and you would now be paid out, having made $4 an ounce profit. Not a bad investment if someone took the risk of 1,000 ounces, for example, or more. Now, a 32% gain in 2 months, and you could convert that money into physical, and even though the spot price has gone up, as we've seen, the premiums have gone down by a similar amount, if not more in some cases. So you could have had your cake and eaten it at the same time. Okay, back to gold. A rise of $40 to $1,743 has taken out the April high of 1751, which is where we stated the next major resistance point lays, and has closed now at a 7.5-year high in US dollar terms. In sterling terms and many other currencies, gold has hit all-time highs, a couple of times this past week. You see, softer than expected US retail sales coming in at minus 16.4%, compared with minus 8.3% last month, and an expectation of minus 12.5%. Plus a worsening position, excluding automobiles, where the figures came in at minus 17.2%, compared with expectations of minus 9%, has undoubtedly had an effect. Industrial production also fell by 11.2%, and not forgetting another 3 million or so added jobless to the weekly figures which were announced on Thursday. It's little wonder that gold began to really take off towards the latter stages of Thursday and then really moved forward on Friday. We did warn last week that Thursday and Friday figures would be significant. Now, from a technical point of view, the next resistance level for gold is seen near the October 2012 highs of $1,791 and support at the 20-day moving average of $1,709. Because of psychological rounding, which though not scientific does appear to have an effect, we're therefore calling support at 1700 and resistance at 1800. Most of the indicators are now pointing to positive momentum, and buy signals are being alerted, and it's difficult to argue with this prognosis. The one area that is keeping a slight dampening effect on gold prices is the relative strength of the US dollar. And should this strength give way for any reason, then $1,800 will be quickly surpassed. Now, going back to silver, which is much more exciting for the moment. The gold to silver ratio has of late reached unprecedented levels, and it was not that long ago that it surpassed, albeit briefly, 125 to 1. It then began to settle in the 109 to 113 to 1 range. It's now decidedly fallen below 105 to 1. And the question is, of course, is this an aberration, or will we see it weaken further? Well, to some degree, most of the bad news affecting the industrial demand for silver is already out there. The economic figures tells us that there's not much demand for silver going on for industrial purposes. We've stated for some considerable time that silver will find its rising level once all the negative industrial news is out there, and when the monetary demand for silver outstrips the fall in industrial demand. We could now be at that juncture, or at least very close to it. Gold is a buy from a technical point of view. Experts are predicting further falls in the equity markets, and the dollar is still very strong, and any weakness from this level will buoy gold. But with gold beginning to reach all-time highs in US dollar terms, not quite there yet, but pretty close, there's not a surprise, or it should not be a surprise, that investors are now looking at silver as a cheaper option. Also, with a mind to the fact that when industrial production begins again, once all the lockdowns have been released, for the want of a better expression, then demand for that source of silver will also increase, thereby potentially pushing prices up. Now, there are, admittedly, some, not many, but some alternatives to gold and silver for investment purposes, and Bitcoin and other cryptocurrencies may be deemed to serve that purpose. But there is no doubt in our minds that the mainstay is still and will remain gold, followed by silver. Now, silver has pushed through the $16 resistance level and has breached the top of our upwardly raised range of $15 to $16.50, which is, quite frankly, extremely bullish. $17 is the next target and resistance range, which not that long ago was a support level, and that technically speaking $17.25 is seen as major resistance. Now there are two schools of thought concerning silver at the moment. The first is that it's now close to pre-crisis level prices, and its recent rise may result in some profit taking, and the next move will be down. The second school of thought is that silver is playing catch up with gold, and will start to head back to a more recently normal 90-1 gold to silver ratio, which at current prices would see silver reach $19. And then this school of thought argues that the ratio will fall back to a more, shall we say, reasonable term average of 80-1, thereby giving us a current price just shy of $22. Now, we're not talking about this next week or even necessarily next month, but it is in the sights of those putting forward this theory. Now, this is, though, and this is the exciting part, assuming that the gold price remains at its current level, which even we do not believe will happen. We can now see gold testing its all-time high later this year. And of course, depending on further financial news over the coming months, we will be able to see whether it does actually move into $2,000 territory this year. Now, we were highly suspect and not convinced that this was going to happen, but we can see new or additional tensions mounting with China, or at least between China and the United States. We see President Trump in a rather precarious political situation, whereby perhaps we would have argued a few months ago he was almost guaranteed to win the general election in November. Now that is by no means certain. And he is the sort of individual who may get himself involved in a dispute in order to deflect to some degree and be seen by his base as a very strong and powerful leader. And these political activities could have a profound effect. And that's not even illegitimizing. There is genuine concern about China. What we don't know currently is what actions, and we've seen it with Huawei recently losing US support, we're not sure exactly what will come of this and what actions the Trump administration will take. So we have the uncertainty surrounding an election year in the United States, which undoubtedly will cause a degree of instability, which for gold and silver holders will be good news as far as their prices are concerned. So let's now take a look at this week's US economic data to be announced. On Monday, we have the NAHB Home Buyers Index for May. Tuesday, housing starts for April and building permits for April. Wednesday, the advanced services for quarter one. Thursday, which really is the important day, initial weekly jobless claims. Will that be close to 3 million again? We certainly hope not. Market manufacturing flash PMI for May. The market services flash PMI for May. Existing home sales for April. And the leading economic indicators for April. And Friday, nothing scheduled. So apart from Thursday, there is little economic report data that is likely to influence markets next week. So precious metal prices are therefore, apart from Thursday, more likely to be influenced by the dollar value and any continuation of its bull run on Friday. For gold next week, we're still mildly bullish and envisage a price range somewhere between $1,700 and $1,800. And silver trading between $16.25 and, if it can get that head of steam, up to that $17.25 resistance level. But we have capped our rate at $17.50 because we're having a $1.25 spread, just in case of extremists. Now, there are a number of commentators whom we regard as serious commentators as opposed to pumpers, putting the positive argument for gold over the next 12 to 24 months. And we shall produce a video on this very subject in the next couple of days and put forward the arguments that they are conveying to justify a quite reasonable sharp increase in the price of gold moving forward. Anyway, what do you think? Do share your thoughts. Thank you so much for listening. If you haven't already done so, please subscribe to our channel and press the bell sign so that you're notified of our videos as and when they are published. And not forgetting our Richard and Greg channel, and we've put links to all of these in the description box below. And once again, we publish videos on that one every few days, and the next video will be due to go up tomorrow. We trust and hope you have an enjoyable and safe weekend and week ahead. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.